Imagine waking up to find out your home, your biggest investment, has lost 30% of its value overnight. Yes, you heard that right. Zillow's latest report shows that home values in parts of Florida have dropped by nearly 1/3. It's a shocking and harsh reality for many homeowners. We're diving deep into what's happening in Florida's real estate market. From the beaches of Miami to the busy streets of Tampa, the market is on a downward spiral. We'll explore why this is happening, look at the numbers, and see what it means for you. Over the past year, Florida's real estate market has taken a dramatic turn. While some areas saw slight gains, Florida's market hit a major slump. According to Zillow, not only have home values dropped, but inventory levels have skyrocketed. What used to be a seller's market with fierce bidding wars is now a buyer's market with plenty of homes but fewer buyers. Stick with us as we unpack these trends, analyze expert opinions, and predict what might happen next. Is this just a temporary drop, or is it a sign of bigger changes ahead? Overview of Florida's real estate crisis. In the last year alone, Florida's home values have dropped so dramatically that some neighborhoods are seeing prices fall by as much as $100,000 per home. According to Zillow, this shocking decline is part of a larger trend affecting the entire state, turning the real estate market upside down. In cities like Tampa, home values have plummeted from an average of $342,000 to just under $240,000. That's a massive drop of nearly 30%. Meanwhile, in Miami, the inventory of homes for sale has skyrocketed by 61% compared to last year. This flood of available properties means sellers are struggling to get their asking prices, leading to significant price cuts. But Tampa and Miami are not alone. Across Florida, cities like Orlando and Jacksonville are experiencing similar trends. Zillow reports that in Orlando, home values have dropped by 15%, while inventory levels have increased by 33%. Jacksonville isn't far behind, with a 20% drop in home values and a 27% increase in homes for sale. One of the most striking examples is in Sarasota. Here, despite being a popular destination for retirees and vacationers, home prices have fallen by 25% over the past year. This area, known for its beautiful beaches and vibrant art scene, is now facing a real estate crisis like never before. The ripple effects of this downturn are being felt statewide. According to data from Redfin, Florida's overall housing market has seen a 24% decrease in home sales year over year. This decline is the sharpest drop in the state's real estate history, surpassing even the downturns experienced during the Great Recession. Additionally, the time it takes to sell a home has increased significantly. In the past, homes in Florida would sell within weeks, but now the average time on the market has stretched to nearly 60 days. This extended selling period is further evidence of the market's slowdown and the challenges sellers face. The economic impact is also notable. The real estate sector, which significantly contributes to Florida's economy, is seeing a contraction. The National Association of Realtors reported that the state's housing market slowdown is leading to reduced consumer spending, which could have long-term effects on local businesses and employment rates. Why is this happening? Rising mortgage rates play a big role. As interest rates climb, borrowing becomes more expensive, which means fewer people can afford to buy homes. According to Freddie Mac, the average 30-year fixed mortgage rate has jumped to 7.44%, the highest it's been in over a decade. This surge in rates has priced many potential buyers out of the market. Moreover, the pullback of large investors is exacerbating the situation. Companies that once bought homes in bulk are now selling off their properties. For instance, First Key Homes, which owns about 48,000 properties nationwide, has started liquidating their assets in Florida. Homes they purchased for over $400,000 are now being listed for nearly $100,000 less. This massive sell-off is contributing to the falling home prices and increasing inventory. Even more alarming is the trend in new home construction. Builders who were once rapidly developing new housing projects are now halting construction due to fears that they won't be able to sell new homes at profitable prices. The U.S. Census Bureau reported a 22% drop in new housing starts in Florida compared to last year, reflecting the builders' lack of confidence in the market's recovery. Florida's real estate market is in crisis. With home values dropping, inventory levels rising, and economic repercussions spreading, the state is facing a challenging period. The combination of high mortgage rates, investor sell-offs, and stalled new construction projects has created a perfect storm, leaving many to wonder how long this downturn will last and what recovery might look like. Analyzing the causes. Did you know that investor purchases in Florida have dropped by a staggering 60% from their pandemic peak? That's right, a dramatic shift that has played a huge role in the state's real estate market downturn. But what exactly is causing this chaos? First and foremost, let's talk about interest rates. Mortgage rates have shot up to around 7.44%, making it significantly more expensive to buy a home. According to Freddie Mac, this is the highest rate we've seen in over a decade. Higher interest rates mean higher monthly payments, which has pushed many potential buyers out of the market. When fewer people can afford homes, demand drops, and so do prices. During the pandemic, Wall Street firms and investment companies scooped up homes in bulk, driving prices up. But now, these same investors are selling off properties at a loss. For example, First Key Homes, which owns about 48,000 properties nationwide, is liquidating many of their Florida homes. In Port Charlotte, a house they bought for $440,000 is now on the market for $330,000. These sell-offs flood the market with more homes, pushing prices even lower. Another major factor is the glut of new construction. Builders went on a building spree over the past few years, expecting the high demand to continue. However, with the market cooling, many of these new homes are sitting unsold. According to the U.S. Census Bureau, new housing builds in Florida have dropped by 22% compared to last year. Builders are halting projects, fearing they won't be able to sell these homes at profitable prices. The rental market is also feeling the pressure. Zillow reports that rental prices have increased by 28.1% over the past year, hitting an average of $1,999 per month in Tampa. While this might seem like good news for landlords, it's a double-edged sword. Higher rent prices mean fewer people can save for a down payment, further reducing the pool of potential home buyers. But the issues don't stop there. The pandemic-driven demand surge, combined with historically low interest rates, created a housing bubble. Now that the market is correcting, the bubble is bursting. According to the National Association of Realtors, the housing inventory in Florida is now 48% lower than pre-pandemic levels, meaning there are significantly more homes available than buyers. Additionally, demographic shifts are influencing the market. Many baby boomers who moved to Florida for retirement are now selling their homes to downsize or move closer to family. This influx of properties adds to the already high inventory, further driving down prices. Please take 2 seconds to help me out and hit the like and subscribe if you find this video interesting so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. Local policies and regulations have also played a role. Florida's relaxed building codes allowed rapid construction to meet the high demand. However, this rapid expansion has now led to an oversupply of homes. Cities like Tampa and Miami, which saw a construction boom, are now dealing with the consequences of too many homes and not enough buyers. The insurance market in Florida is another piece of the puzzle. With frequent hurricanes and natural disasters, home insurance rates in Florida are among the highest in the country. According to the Insurance Information Institute, homeowners in Florida pay an average of $3,643 annually for insurance, nearly double the national average. High insurance costs add another financial burden on homeowners and potential buyers, making the market even less attractive. Lastly, let's not forget the role of economic policies at the federal level. Changes in tax laws, mortgage regulations, and interest rate policies can have ripple effects across the housing market. The Federal Reserve's decisions to raise interest rates to combat inflation have directly impacted mortgage rates, leading to higher borrowing costs and reduced affordability. In-depth data analysis. Imagine this. In the last 6 months, the number of homes listed for sale in Florida has increased by an astonishing 900%. That's right, according to Realtor.com, the inventory surge is unprecedented, flooding the market with homes and driving prices down. But how did we get here? The data tells a compelling story. As of May 2024, there are about 1.2 million homes for sale in Florida, compared to just 120,000 6 months ago. This massive increase has put pressure on home prices across the state. In fact, according to data from Redfin, homes that would have sold for $400,000 a year ago are now struggling to get offers above $280,000. Breaking it down by city, Orlando has seen its inventory triple since the beginning of the year. Zillow data shows that Orlando had around 3,500 homes for sale in January 2024. By June, that number ballooned to over 10,500. This glut of available properties is causing sellers to cut prices drastically to attract buyers. Miami tells a similar story. In Miami, the number of homes for sale has increased by 75% in the past year, according to data from Realtor.com. As a result, the median home price in Miami has dropped by 20%. Homes that were worth $500,000 are now being listed for $400,000, yet they still sit on the market for months. The rental market isn't immune either. Rental listings in Florida have also increased, contributing to lower demand for home purchases. According to Zillow, rental listings in Tampa have surged by 40%, leading to a softening rental market and pushing potential buyers to reconsider purchasing homes. Historical comparisons. To understand the current crisis, it's helpful to look back at previous real estate downturns. The housing crash of 2008 is often cited as a benchmark, and the similarities are striking. During the 2008 crash, home prices in Florida dropped by an average of 35% over 2 years. The current drop, while not as severe yet, is accelerating at a faster rate. According to CoreLogic, the average decline in home values across Florida has already reached 30% in just 1 year, and experts fear it could match or even exceed the 2008 figures if trends continue. Another key metric is the foreclosure rate. In 2008, Florida saw a peak foreclosure rate of 11.9%. Today, while still lower, the foreclosure rate is climbing rapidly. Data from Atom Data Solutions indicates that foreclosure filings in Florida have increased by 150% year over year as of May 2024. This rise is reminiscent of the early stages of the 2008 crisis, signaling potential trouble ahead. Looking at inventory, the current surge is even more dramatic than what we saw in 2008. Back then, inventory levels doubled over 2 years. Now they've increased nearly tenfold in just 6 months. This rapid increase is putting extraordinary downward pressure on prices and could lead to a prolonged market correction. The economic conditions surrounding the current downturn also bear similarities to past crises. In the early 2000s, loose lending practices contributed to the housing bubble. Today, it's a combination of high interest rates and post-pandemic economic adjustments. The Federal Reserve's aggressive rate hikes, aimed at curbing inflation, have made borrowing more expensive, mirroring the restrictive lending environment that followed the 2008 crash. Moreover, demographic shifts play a role. In 2008, many young families were forced to delay home ownership due to financial instability. Today, the millennial generation, now in their prime home buying years, faces a similar predicament. According to a survey by the National Association of Realtors, 45% of potential millennial home buyers have postponed their purchase plans due to rising mortgage rates and economic uncertainty. Impact by region. Did you know that home prices in Miami have dropped by over $100,000 in the last year? This is just one shocking example of Florida's real estate crisis hitting different regions hard. In Miami, the median home price has plummeted by 20% from $500,000 to $400,000. Housing inventory has increased by 75%, flooding the market and pushing prices down. Tampa is experiencing a similar drop. Home values there have fallen by 31.4% from $342,000 to $234,000. Inventory has surged by 38%, turning it into a buyer's market. Orlando has seen home prices fall by 15% due to a tripling of housing inventory. Homes that were $350,000 are now around $297,500, with listings up significantly. In Jacksonville, home values have dropped by 20% from $300,000 to $240,000. The number of homes for sale has increased by 27%, adding pressure to the market. Sarasota, known for its retirees, has seen home prices fall by 25%. The median price dropped from $400,000 to $300,000, with inventory up by 46%. Fort Lauderdale's median home price fell by 18%, from $450,000 to $369,000. Inventory increased by 34%, making it tough for sellers. Even smaller markets like Lakeland are affected, with a 10% drop in home prices and a 24.5% increase in inventory. No part of Florida is untouched by this crisis. Rising inventory and falling prices create opportunities for buyers, but significant challenges for sellers and investors. Understanding these regional trends is crucial for making informed real estate decisions in Florida. Stay tuned for more analysis and expert opinions in our next section. Economic consequences. Did you know that Florida's real estate downturn is causing local businesses to suffer too? According to the National Association of Realtors, the state has seen a 24% decrease in home sales over the past year. This slump isn't just affecting homeowners, it's hitting local economies hard. When home values drop, so does consumer confidence. People feel less wealthy and cut back on spending, impacting local businesses. Restaurants, retail stores, and service providers all feel the pinch. A report from the University of Florida highlights that every 10% drop in home prices results in a 2.5% decrease in local consumer spending. This means fewer customers and lower revenues for small businesses already struggling to recover from the pandemic. Moreover, the construction industry, a significant employer in Florida, is facing challenges. According to the U.S. Census Bureau, new housing starts in the state have dropped by 22% in the past year. This decline in construction activity leads to fewer jobs and reduced income for thousands of workers. The ripple effect extends to suppliers and other industries linked to home building. Tourism, another vital part of Florida's economy, is also indirectly affected. As the real estate market struggles, fewer people are investing in vacation homes or rental properties. The Florida Department of Economic Opportunity notes a 15% decrease in new vacation rental listings over the past year, which translates to less income for local economies reliant on tourism. Future market predictions. What does the future hold for Florida's real estate market? Experts have mixed predictions, but the consensus is that recovery will take time. According to Zillow, while the current market slump is severe, it is expected to stabilize over the next 12 to 18 months. However, this recovery won't be uniform across the state. Some areas like Miami and Tampa may see quicker rebounds due to their economic diversity and attraction to international buyers. Conversely, regions heavily reliant on local buyers and new construction might take longer to bounce back. Freddie Mac predicts that mortgage rates could slowly decrease by late 2024, which might help spur home buying activity. Lower rates will make borrowing more affordable, potentially revitalizing the market. However, this is contingent on broader economic conditions, including inflation rates and Federal Reserve policies. Real estate investment firms are also watching closely. According to a report by the Urban Land Institute, investors are cautious but optimistic about long-term prospects. They highlight the importance of Florida's strategic location and its appeal to retirees and tourists as factors that could drive future growth. Another critical factor will be policy responses at the state and local levels. Potential measures could include incentives for first-time home buyers, tax breaks for real estate investments, and efforts to stabilize the rental market. The Florida Housing Coalition has proposed a series of policy recommendations aimed at addressing the housing crisis, including increased funding for affordable housing projects and support for distressed homeowners. Thanks for watching, and if you're considering buying in Florida, you might want to watch this video next to be even more prepared before you invest.